All right, welcome fellow escapees. So if you are new here, this channel is all about personal finance. I also talk about what myself and my clients have done to achieve financial freedom and leave a job that we hated or didn't find passion in, so that we're able to have locational freedom as well as financial freedom and live life on our own terms. So if that's something you're interested in, make sure you hit that like and subscribe button so you can get notifications of when I drop my next video, and I can help you with that journey. All right, so in today's video, I want to talk about some recent headlines that have made the news in personal finance, and I want to just share my thoughts on it and hopefully help you avoid any type of scams or losing any money that you invested, so that you don't have to be where some of these people who have invested in this fund are in today. They've lost a great deal of their income and money. So I don't want that to happen to any of my followers and fellow escapees. So today we're going to cover Jay Morrison. He is a real estate investor, real estate mogul, real estate agent, and he's done pretty well for himself as far as I can tell or I know over the years. But recently, within the last few years, he decided to start a real estate fund and raise money from the public. And I think that might be where things went a little awry for him, because he may not have been in a position at the time that he started this to do that with people's fund and people's money. So let's just talk about it. So Jay Morrison, and this is all allegedly. I'm just going to use allegedly because there's just too much coming out, and there's too many people posting and commenting and saying this happened, that happened. So let's just use allegedly for now, so we know that there's still information unfolding, and we don't want to jump to too much conclusion, but we want to just bring to people's attention what is happening at this current time, and just, you know, in the future, if we're investing our money, what do we look out for? What do we do, right? So I was rooting for Jay Morrison, and especially when he married his wife. She's a poet. She's won several awards and recognition for her poetry and her beauty and her elegance. So, you know, I was rooting for them. I was rooting for him because he is an ex-felon and ex-drug dealer, and he turned his life around. So I love stories like that. I want young men, black men, to definitely succeed in society, do well, be a role model for other young men and women in the community. I love it. So I'm rooting for him. And I'm hoping that no matter what we discuss today in this video, there's some positive outcome to this. I really hope so. This is my hope and my prayer. But as of right now, things are looking a little bleak for him. So let's just cover it and just see what we can do to protect ourselves when these kind of things happen. And what do we do as investors, okay? So Jay Morrison started a fund, and he started it, I think he filed with the Security and Exchange Commission around 2016, and the fund was approved and up and running and regulated by 2018, and then that's when they started taking in investors' money and starting to raise the capital, right? So from what I understand at that time, it had a valuation of around $50 million. I have no idea how they came up with that valuation when, as far as, you know, I can tell, there was no assets to or revenue or anything to support that type of valuation, okay? They had on their balance sheet at the time when they went public that they, I'm sorry, not really, because they didn't go, they're not a publicly traded company, but they're more like a real estate. Well, I guess they are kind of publicly traded, but at the time on their balance sheet, they had about $15,000 in assets or cash that they at least claimed, okay? That's what they put on there. So they could have had more, they may have had less. Regardless, that's what they put on there. Over the years, they have had 86 investors invest into this fund, and I'm getting numbers between 12 to 15 million was raised. So about 5 years, 12 to 16 million was raised. That's not too bad for a startup fund like his, and I'm still proud of the investors and people who help with this fund. Like I want to commend them for trying. So that's good to just see collectively that we can come together and raise money. That I did like to see that it got off to a good start. So it did get off to a good start, but over the last several years, the fund, as of now, from the investors who invest in it, are claiming misallocations and mishandling of the money that was received. Now, like I said, it's all allegedly and it's still unfolding. So we're gonna have to wait for this to unfold a little more. So as that is happening, I will get more documentations on where did this money actually go, what happened, things like that. So I'll probably do an updated video later on. But as of now, things are, like I said, they're not looking really well for this fund. A lot of investors feel like they have lost their money. They feel like there's too much staff. Like a lot of the money that they are aware of as of now and what the documents that they are receiving right now, those documents are showing that a lot of the money was spent on administrative costs, meaning like employee costs. And for the fund of that size, they have way too many employees. They also noticed things like Jay Morrison funding possibly a personal resident for himself and his wife or his family. And they also are noticing Jay Morrison maybe taking a little too much in fees for management fees. So these are the things, like I said, are gonna unravel and unfold as this goes on. And then from there, we're gonna be able to tell what really happened to all this money that was raised to go into buying assets like real estate versus what actually happened to it, okay? But I'm gonna tell you guys something, and I'm gonna sit this down now because I think just want to highlight those points. I'm gonna tell you guys something from what I've learned being in finance, as well as being an investor myself, as well as the stories I've heard over the years from people who have lost money doing deals or investments or whatever. And I have some really great mentors, by the way, some really affluent, successful mentors. And so I have, hired them to be my coach. I have worked in financial institutions, so I have heard, read, studied a lot. The first problem, one of the problems I saw when I heard about the fund and I thought of investing in a fund is I'm not the one to usually, this is all me personally and me just sharing it with my fellow escapees, okay? This is just our personal values and opinions. This is not, universal or anything like that. But by me growing up in impoverished communities, in poor Black communities, I have, and especially at this age, have not seen a track record of people who have felonies or criminal backgrounds. They have a lot of them have a low percentage rate of turning their life around. I think it's improving because of all the opportunities now today versus back then. I feel like they didn't have a choice because that felony or that record kept them from getting jobs. So the way I understand it is because of that, they had to resort back to the street life or back to something criminal to survive. This was survival for a lot of them. This is the information I've gathered. Now, if you have different information, please share it out. I love to hear it. So growing up around, like I said, some of the people I grew up around are like just gang members and people in the streets and things like that. A lot of times when they have these kind of records, I don't really see, I see some of them change their life, but they also have a habit, some of them are reverting back to what they're used to doing, okay? So for me, because I know that, or I've seen this happen, I need to build a little more trust in you first, is what I'm trying to say. I even, I'm just gonna get a little personal. I don't even date guys with criminal records, I don't have a criminal record. I have had to, with my mortgage license, real estate license, and Texas foster care license, I've had to go through criminal background check, FBI fingerprinting, FBI background check, credit report check. So I don't have a record myself, and I'm a little wary of people who do have records. I do believe everyone can change their life. I do know that, I've seen it, but I'm always a little weary at first. So one of the reasons I didn't invest in a fund was I wanted to see the track record first. But I wanted to see this guy succeed, and I also wanted to get involved eventually. I just didn't do it at first. So that was one thing that held me back a little bit. The next thing that held me back a little bit was because I lived in New York and I've been around Wall Street, I've worked at financial institutions, I've been around money. I know that it takes a team to help grow money, and it takes tenure with education, certifications, and knowledge to grow money. It's kind of hard for most people to do. So just by my experience, I did not see or understand at the time who else was helping him with a person that doesn't have enough credentials, backing him or helping him manage this fund. So basically, we'll just use like a Warren Buffett, of course. Everybody knows Warren Buffett is a big investor, been able to give major returns to his shareholders. But let's just say Jay said, hey, Threa, I got Warren Buffett on my team. He's my coach. I've hired him, and I hire Warren Buffett's probably like $200,000 a year anyway, but let's just say, and or even Peter Lynch, the guy who's known to beat Wall Street for many years. His name is Peter Lynch. I believe he ran the Fidelity Fund. But Peter Lynch, if he said, hey, he's retired, I already know Peter Lynch is retired, but let's say he's on my council, I'm paying him, he's helping me understand and manage this, I would take that over the credentials, because I do believe I have coaches myself, right? So you can have coaches who are older than you, more experienced than you, who have seen the market fluctuate, and you can hire them to help you, right? Or to assist you with this business. So I wasn't sure who was assisting this guy with this business. I saw a few celebrities, I saw some names up there, but those people, from my experience, did not have the type of knowledge and tenure that in certifications and knowledge of personal finance that will make me comfortable enough to put my money into this fund. So that's another reason why I didn't invest in this fund. So there's two. Number three, I'm not sure what the return on investment was for this fund, like what they were telling people, but I know that startups funds take a while to get going, number one, and then they take a while to see a return. And so you're looking at 3 to 5 years before you see a return on stuff like this. And I just didn't have that information at the time. I can also tell you guys, in 2018, at least in our city of Texas, in the state of Texas, and I'm sure on the East Coast, real estate was accelerating. Now it wasn't going as crazy as when the pandemic hit. Then it went like astronomically high, right? But it was on a verge of an upward trend, right? It wasn't on a downward trend. As far as I'm aware of, in the majority of the country, it was stable or going up. So we got 2018, 2019, 2020, which was the pandemic, right? So I'm not sure where he was. I gotta pause that. I know the video probably stopped, but hold on. Let's just pause this just because. Is there a way to pause this? Okay, because we don't want it playing stuff that we're not talking about. But I don't know any market that is a major market, the big cities, right? That the real estate was so low that people were buying at such a steep deal and discount that there was enough margin to turn any kind of major profit for an investor. I'm not saying there weren't any. I know there's a few deals here and there. I know you can go outside of your city and go to certain other cities and little towns and find deals or find markets that no one's really discovered and fix something up and flip it and turn a profit. But what I'm saying is, I don't know if they knew that information or how in tune they were. It seems like a lot of stuff I'm getting was in Atlanta, and Atlanta was already on an uptrend. Atlanta was booming. So I don't know how he was going to turn a profit anytime soon for these clients that was going to be a substantial return. So I would have already been a little wary of getting in at that time for something like this, me personally. Another thing I would have looked at is the management fees. Typical management fees on like a REIT, a real estate investment trust fund, is about anywhere from 2 to 4%. And I believe people are reporting that this fund was taking as much as 5.25%. And you guys can just verify that if you were already investing in, if you signed the form. I think they had you guys sign a form that said, how much the fees were. You probably can read that on that statement, or go and just do a little more research and find that. But I heard the fund was a really high fund, and I would have already been a little wary just from that. Like, hey, there's just too many management fees. This REIT over here that has more of a track record is only offering its management fee. So I would have probably been a little wary on the management fees as well. What else kind of stood out for me with this fund? There's something else I wanted to share with you guys about this fund that really drew my attention to speak on it. I really think it's like I highlighted the management fees, the education, and the tenure of who is running this company. Where, like, what assets are they buying, and how are they when do they expect to, like an ROI or return on investment? And as well as that criminal record would have stalled me just a little bit on investing. It came back to me, you guys. So from what I understand about this fund as well, is that when it started, Jay Morrison was the CEO, the CFO, the chief of technology, the chief of marketing, and something, and the chief of asset or something like that. Those are way too many roles for one person. He can probably hold about 2 roles. I do believe that, but that is too many roles for one person. So I know when a fund is getting up and started, there might be 1 or 2 people in a certain position that have to help out. That is true. That is normal. But in a year, 2 years, 3 years, there should be some other board members or staff to take those roles. One person cannot oversee do all those roles and then do check and balances for all those roles, right? So this company also did not have great check and balances in place to protect the investors, and it also it's just like he was just spreading himself too thin, and so that would have brought up another red flag with me as well. So I want you guys, when you're looking into investing in funds like these, to kind of like look at a lot of these things when you're thinking of investing in new companies. New companies really do need your help. Our help in the community, with our investors' help to get up and going and finance and started. But we need to be just aware of some of those like basic things, and then make a decision from there if we want to put our money into something that's risky. Because when it's starting up like this, it's risky, right? So that was another thing that just caused me not to invest in this fund. I am just hearing a lot of people have lost their money. I also just keep seeing people talking about that was, they invested all their money into this fund. You should never invest all your money into anything. I don't care who owns it. I don't care if Warren Buffett owns it, Peter Lynch, who I just told you was one of the best investors on Wall Street. I don't care who owns the fund or who's managing it and running it. You should never put all your money into one thing. Guys, investments are just tools and vehicles we use to get to grow and multiply our money and get a little bit ahead. But it doesn't mean we throw everything into that one thing. Like, we have to be smarter about that, We can't just put all our money into one thing. So if you see an investment and you love it, you can even know the owners. It could be somebody you love, you trust. You don't put all your money into that. Now, when we do videos on building a business or something, sometimes people do go all in on that. But that's you, because you're gonna be responsible for that. But when it comes to somebody else managing your money, you gotta be careful, because all they can do is say, well, I invested it and I tried. And then it's gone. because it has a risk to it. So you knew you're risking, like your money. So all they have to do is say that, and you don't even know if they really invested it the right way for you, bought or used it for their own personal gains, like bought themselves homes and cars and vacations. You don't even know if they did all that with your money, so guys, just be really careful about that. I think that's all I want to say about the Jay Morrison thing. But you guys can drop a comment below and let me know if y'all been impacted by this fund, what your take is on this fund. And remember, a lot of stuff is alleged, and we are still waiting for more information to unfold about this fund. But I want to share with you guys, just like I said, what can you do to just avoid this happening to you? I just don't want any of my fellow escapees to email me, call me, and be like, you won't believe what just happened to me. I got scammed. I lost all my money. I mortgaged my house and lost everything. I just don't want to hear those stories, because they are painful, because you guys work so hard, and it's like so hard to get that money back. So it takes you guys years to save up. I don't even care if you gave that guy $5,000, $1,000, $10,000. It doesn't matter the amount. That's your money that you had to go slave and work hard for. So I hope that this video and others that I made save you guys from making these mistakes, okay? If you have extra money to spend or to invest, and you want to try things like Bitcoin or some new fund that started, or some new project, or my friends opening up their own little business in this shopping center and I want to give them 10K. If you have extra money, you do that. But when you're down to, a little bit of money or it's all you have, be wary of things of this nature. All right, so the next thing we're going to get into is this guy. I've never heard of this guy. My brother told me he's heard of this guy, but I've never heard of this guy. And maybe in the future I'll make more videos about this guy, but I would never take financial advice from this guy. And just by this one thing he said. And I don't even know if he could make better financial videos on, other videos that are better. But from this is the first video I've ever seen this guy in. It's the first time I've ever heard of him. And he said this, and I was just like, a heart attack. Oh my God, he told people this crap. Like who the heck would say this to someone? I guess his name is Birdman Kevo or something. I don't know. So I don't take advice from somebody named Birdman anything, or Bandman. Sorry guys, Bandman. I wouldn't take financial advice from somebody named Bandman anyway. So Bandman, in one of the videos, he was being interviewed by a financial platform or like an entrepreneur platform, and they were asking Bandman about paying your student loans. And in this video, Bandman was like, you don't have to pay your student loans. I wouldn't pay mine. I don't care if they're on my credit or if they're not on my credit, or something like that. I'm just like, huh? Just like, who would say something like this? So there are people out there who just do not understand finance enough, and they will get in so much financial trouble by listening to a guy like this telling them not to pay their student loans. Now, if you have private student loans, possibly you can go into default and you can not pay them, and it may mess up your credit for 5 or 7 years, and you may not have to pay those, or they may not come after you or whatever. But if you have federal student loans, the ones by the government, and you try to do this shit Bandman Kevo said, you will be screwed for life. So in the video, he was talking about, we already went off. So in the video, he was talking about don't pay your student loans, right? Now, if you have federal, we're just going to use federal, because I don't know how private works, if they come after you, if they don't come after you. But I know how federal works, and a majority of the population has federal because federal is easy to get. Private, I believe you have to have good credit score and income and all that, and you can get a private. Federal, they will give federal loans, because I have federal student loans. They will give almost anyone a student loan. Like they don't care about your credit. They don't care about your job, whatever. If you're in college and you're taking a class, they will loan you up to 50, 70, 100 grand, 200 grand of money, okay? And I know everybody I know has a Pell Grant or whatever, FAFSA, federal. Everybody I know has federal. Okay, so if you do not pay federal loans back, what could happen is you will they will garnish your wages. So they'll contact your employer. They will send a like a letter and a notice to let them know that you're in default of your student loans, and then that employer will garnish your wage and send that money to your student loan. So that's one of the things can happen. If you owe, if you're getting a refund from like the IRS or your taxes, they can take that refund and apply it towards your student loans. You'll never get that money. They can garnish your bank accounts. So they'll find out what bank you have and they will start drafting money out of your bank account. It's just the same as if you owe the IRS money. It's the same thing. They will get their money from you. I've also heard, this hasn't happened to me, so I've heard it, but I read about it, but I haven't actually had it experience it or know somebody who experienced it. But they claim if you're in the United States of America and you're in default and you try to go travel abroad just on a vacation or something, they will not let you leave the country. I haven't had it happen yet, and I haven't met anybody who told me it happened to them. But I read many years ago that was a possibility. So if you're listening to a guy like this who's teaching you to be financially irresponsible, not pay back your student loans, and let them, go into default, or I think he was basically saying just get them removed off your credit report, because he was a credit repair guy and a finance guy. But even if they come off of your credit report, like you can dispute them and they won't show on your credit report, you still got to pay those bad boys, So don't take financial advice from people who tell you how to finesse a system or not be responsible, because those kind of people can really get you in trouble. I also heard allegedly that this guy named Bandman, he dropped out of high school, and we don't really know he has street cred or whatever, so we don't really know where he's getting his financial advice from. But based on that interview and what I heard, please don't listen to stuff like that. Please pay your debts off if you owe them and then you're in a position to do so, because they will come back and haunt you, and it will be when you least expect it. All right, so that's another personal financial advice that I hope you don't follow or take as a fellow escapee, as you're planning your corporate escape, planning your finances, planning to get out of the job that you dread, the job that you want to, a job that you hate or whatever. You're planning your retirement. Don't do those things those people are doing, because it's just going to put you in a really bad situation. Okay, the last one is this guy named Cesar Pena or something, and he is also in the real estate game, and he's also linked up with DJ Envy, which I really like DJ Envy, you guys. I don't listen to him a lot, but when I get on the road, sometimes I turn on the radio and I hear DJ Envy, Charlemagne the God. I don't like calling people God besides God, but Charlemagne the God, that's what they call him. And then what's her name? She's so cute. I can't remember the girl on there, but she's amazing as well. But I hear them occasionally as I'm driving. I hear the show and I think they're funny and they're cool and everything like that. From what I gather from this story, I don't think DJ Envy had anything to do with the scam part of it. Now, until more documents come out or text or email and this unfolds, yeah, I could probably find out some things about DJ Envy. But as of now, from what I've researched, I don't think DJ Envy knew this guy was gonna do what he did. And from what I understand, DJ Envy also lost $500,000. So this guy named Cesar Pena, I heard he was doing well and he was returning people's money back to them as he was flipping the properties or doing the real estate deals. But where I would have been cautious as an investor or as a person that understands finance is when some of the victims of this scheme or what happened were saying that they were told that they were going to get a return in 3 months or under 6 months. And the returns were substantial. These were not small returns. This was like, you're going to get 20 to 50% of your money back in under 3 to 6 months. Now, I've studied finance for a long time. I've been around people in Wall Street, and I'm telling you, if I knew about those kind of investments, we would be sitting here as little billionaires right now. That is really hard for anyone to guarantee or give anyone on good markets and bad markets. That is just really hard returns to give people. It is not uncommon that sometimes I've seen mutual funds grow to the point where they did a 50-80% return, but they did it like that 1 or 2 years, and you see them kind of flatline that next year or drop the next 10 years or something. So I have seen funds spike or certain investments go up, but that's usually after an investor have held that for almost 10, 20 years. It's not like 3 to 6 months. I've never seen that, right? So I would have been a little skeptical on somebody telling me that I have to invest, if I invest this money of mine, that I'm going to receive a return that high. I would have been really skeptical. I would have also been skeptical as being a real estate agent. I know deals are not easy to find, especially in today's market. So I would have wanted to know, how was he able to find a deal that can return that type of investment? What this deal, what was it? A commercial real estate, single family? More than likely he has to rehab it, because there's very few properties that are brand new, like just built, and a builder's like, yeah, I'm selling it at 50%, 75% of its ARV, after repair value. Here you go, just take it off my hands. Like, nobody's doing that when the market was going up the way it was going up, when homes were going 50, 100, 200, 300,000 over the appraised value in some markets, California and Texas and New York and Maryland and all these other places. So I would have been wary of that. Like, where are you finding these kind of deals? And how are you planning to make this kind of return in such a short time? So I would have already knew something was wrong. I think I saw something where it says DJ Envy called, I think his name is Joe Button or something. I don't even watch him either, but I've heard of him. But they were like, he called him and said, hey man, this guy, Caesar's doing this deal. We're gonna all put up 100 to 300 to 500 grand into it. You want in, or something like that, like kind of like that kind of conversation. And they said, the guy said, what? Oh dude, that's a scam. And he said, click. And he said he didn't even explain like why he thought it was a scam. No, he just said click. So people who invest, like myself and my clients and things like that, and people who are in the financial industry, they know those kind of returns are hard to get. They take years to get, and they're hard to get. And so when you hear about it in that short, like somebody can get your money and return it in that short time frame, you really have to be, your antennas need to go up, and you really have to be like skeptical of how that's possible, And so with this case with the Cesar Pena, it is really sad, because unlike the Jay Morrison one, people put, I see 500, 1,000, maybe 5,000, but I don't see like really big money invested, like per person, But with that Cesar one, I'm seeing 100. They said he was calling people like saying, man, you got to put up at least 300. And people were like, well, I don't have 300, but I got 150. He was like, okay, I'll take the 150. So people were putting up 100 to 300 to 500,000 into this scheme. And so that is very hard for most people to recoup from. One guy said he put up, I think it was 100 or 150,000 in cash, which that was suspect too. Like, why would you give somebody cash? You don't want to do a cashier's check. You don't want to do a wire transfer so you can have some type of paper trail that you gave this person your money. You know what I mean? Unless they're your family member, somebody, like I said, you've seen their track record, you've been around them long enough. But when it comes to a general public fund, even if it's on Wall Street or whatever, you want to at least say, hey, I send my money to Morgan Stanley. I send my money to Charles Schwab. I send my money to Fidelity. You want a track record of that, But this one guy, he gave him 150,000 in cash, and then he said he lost everything. And he said that was all the money he had. Why would you give somebody all the money you have? So to me, that's a little bit of greed as well, because you're trying to, flip money or make money real fast, and there's nowhere in history in that shows money can grow that fast and traditionally. Even people who have master's degrees, PhDs in finance and work on Wall Street are struggling to make returns. Not struggling, but they gotta try to beat the market and make returns. They're regulated by the government and the Security Exchange Commission and the Federal Reserves and everybody else, right? And they're struggling to make return, to get these returns for their investors legitimately. So how is somebody street cred, street dudes flipping paper like that? So you guys gotta really think when y'all are giving people your money, like stop being so greedy and desperate to get rich quick, because there's nowhere in history that people got rich really, really, really quick. Like, even if you look at people, they'll be like, well, I started Apple, or I started a tech company, or I started a YouTube channel, or I started a restaurant. They usually have years of hardship before that actually took off. Give me 1 second. I just want to change this background. I don't know. I think that's something my brother put on there. But even the people that have experience are trying to they usually can only annually return about 8, 10, 12, and possibly 15 to 20% in good years. If you get past that 10%, that's like good years. So averagely, these funds only return 8 to 12% a year. And so somebody's coming to you and saying, I can give you 20 to 50% in 3 to 6 months, not even a whole 12-month period. And you really thought they were going to do that for you, or they could? If that was the case, they would be billionaires with Warren Buffett on Wall Street. And they could raise so much money from people who actually have billions to invest, that they would not even ask you for your little $500 to $1,000 to $5,000 to $10,000. They wouldn't even want it, because they would have so many people who have the real money throwing money at them if they can get returns like that. So you guys, I'm really sorry for those who have lost their money already. I don't know how you're going to get that back as of now, unless Caesar or Jay bought some type of asset where that could be sold off and recoup that money. But it's really looking really bleak for a lot of people. Dude, my all right, but my phone then fell on me. But anyway, it really looks bleak for a lot of people based on the information I have gathered so far. But hopefully in the future, you will not be a victim of any more scams, and you will learn that it does take time to grow wealth. And don't be in such a rush to grow your wealth. It will grow. You need to learn the fundamentals of how wealth is built and how it grows. And once you learn those fundamentals, implement those fundamentals, you will be successful. You will get there. Depending on where you started, it can take you 3, 5, 10, 15, 20, 30 years. It just depends on where you start in life and how dedicated you are to getting to your goals. But if you're willing to do that, you will get to those goals and you will have real wealth, instead of putting your money into these schemes or into these investments that are actually stealing from you. So I'm gonna wrap this video up. I think I've explained this topic enough. I think we've talked about it enough. Like I said, I'll do a follow-up video as I get more information on what's going on with this situation, but I just pray to God that you guys do not fall victim to any more schemes and anything else like this. So guys, don't forget to like and subscribe to this channel if you want more content on personal finance and achieving financial freedom. I also offer a coaching program. If you're interested in that, I have a link below where you can book and you can talk to me one-on-one if you need help with anything personal finance or planning your corporate escape. So I'll see you guys in the next video.